Hello, everyone, and welcome to our session on expanding to the US. Before I introduce Parshwa from Doola, let me give the background. So you're a growing UK company and you want to expand. Expansion to the US is increasingly popular. In fact, I've seen in founder groups, it's gone from almost no one talking about it to a lot of people talking about it. Maybe it's just me noticing it because SeedLegals is expanding to the US, or maybe it's just become the latest thing to do. Expanding to the US goes in one of two forms. One, you're a UK company and you want to start selling your goods, services in the US. And thing number two, you want to pivot to become a Delaware topco and principally to raise investment in the US into a US company. Now, expanding in the US to grow your market is natural. And what we want to do is make that way easier. As we've been looking to expand SeedLegals in the US for months, we've been navigating a minefield of which state you should be in and what type of corporation, these things, and it costs fortunes. Lawyers charge tens of thousands for all of this. So I was delighted when we came across Doola, and as we're going to learn in the next 45 minutes, actually, there's a super simple answer to almost all the things that are there. So US is not currently our area of expertise, particularly about incorporation. So we're going to partner and we're going to make the whole process SeedLegals simple. When it comes to flipping to be a Delaware top company, that's a whole separate subject. We're going to cover some of that on this call, but I think mostly it's the question when someone says, I want to flip to be a Delaware top company, the reasons for doing it might be the wrong reasons. It's often, I couldn't find investment in the UK, so I'll look in the US. But you may find you have difficulty raising from US investors as a US company for the same reason you couldn't in the UK. You're not ready yet, investors didn't understand the pitch deck and so on. So we'll cover that separately. But without further ado, let me hand over to the expert on everything about US incorporation. And you're going to learn a ton of US nomenclature and hopefully see all the steps and be able to do them afterwards. So, Parshwa, do you want to intro yourself? Take it away.
Thank you, Anthony. Thank you so much. I'm super excited to be here and to have this chance to host this webinar for you all, along with SeedLegal. We're at Doola. We basically have expertise in the US market, just like SeedLegals have in the UK market. So we help you with everything that you need in the US, right from registration, compliances, like setting up your company, keeping it compliant, growing in the US. So, you can basically scale your business along with us. And yeah, these are very common questions that Anthony has mentioned, and we will address this in the call. Awesome. So I will run through everything that you all need to know when launching in America and explain the process, the taxation, pretty much everything that you know in this quick webinar. And we can then take questions if you'll have any. Right. So let's get started. Yeah. So basically in the US, whenever you're moving to a new country, whenever you're starting a company in a new country, you have a lot of different questions like, what's the process like? How much time will it take? What's the cost like? What do I need to do compliant? What are the tax rates? Even if I make money, am I going to pay most of it in taxes, or am I going to not pay in taxes and I'm going to keep a lot of it? Are there any tax benefits, credits, advantages, loopholes that I can legal tax loopholes that I can use? How can I move money? Are there any banking restrictions? All of that, tons of questions. So as you see, starting a business, staying compliant, educating yourself, scaling the business. These are all different things when you're moving to a separate country that you have no knowledge about. But that's where we come in, where we kind of put together everything for you. We have this business in a box solution where you come to us and we give you everything that you need from scratch to like the end game which you need to run your company. So the first and most important question is what type of structure you should be choosing to incorporate your company, right? So there are three major entity structures in the US, I would say. One is the LLC, S corporation, and the C corporation. LLCs are more for small businesses that are, not looking to raise money. They want to own the business. They want to make it the cash cow. They want to grow the business organically sometimes, or they just want to keep the full ownership to themselves. So those are LLCs where, again, LLCs don't have shares. They have a profit sharing ratio or a membership interest. So if you and I start an LLC, it's going to be 50-50 each, but we don't have shares. We don't know, there is no share, the number of shares or stock defined. So, I don't know whether I have 5,000 shares, 50,000 shares, 5 million shares. It's just a 50% each. So basically, if you're an LLC, you can't raise money from investors because you don't have shares. Investors will always want equity, and you can't issue equity as an LLC, which is why LLC is not a good fit for you if you're looking to raise money in the US. If you're looking to expand your UK operations to the US and you're looking to kind of not raise money in the US and just have an operating entity in the US where from which the operations will be conducted, and you're not, so then in that case an LLC is a good fit. But if you're looking to raise money from US investors, right, so then you will need a Delaware C corporation. So C corporation is what I'll come to why Delaware, etc., in the next slide. But a C corporation is what you need because C corporations have shareholding and equity. The profits are taxed at the corporate level and the dividend are taxed at the shareholder level. We'll deep dive into that a bit more. But C corporations basically have shares. So C corporations have shares. So so if you're looking to raise money from investors, then you should be incorporating a C corporation only. Like that is the first step that is required. Right now,
let me hop in quickly, because what I love to do at SeedLegals is lawyers will tell you 12 things you could do with the risks attached to each. And at SeedLegals, our goal is to tell you the one thing that you probably are going to do based on the fact that you're a standard, startup. And so the short answer is there are many different types of companies, but in the UK, it's an LTD company. Unless you're a charity, it's an LTD company. In the US, if you're an Etsy jeweler or a sole trader or something, you should knock yourself out, and LLC is the way to go. If you're a growth startup, Delaware C Corp is the way to go. Easy.
That's right.
All right.
Awesome. Thank you so much, Anthony, for summarizing that. Also, a quick brief on S corporations. S corporation is actually not an entity type. It's more like a tax election. This is only for you, the residents of the US. So only if you're a US resident, US citizen, only then you can incorporate an S corporation election. So if you ever get confused between C Corp and S Corp is not, like, non-residents don't have the option to choose an S corporation. So the only option for you is LLC or C corporation. And then between them, if you're raising money, C corporation is the way to go. S corporation is only for US citizens and residents. So if you're looking to raise money, C corporation is an ideal fit. Now, the best state for incorporation. There are 50 states in the US. Firstly, it's important to understand that in the US, the registrations happen at the state level. So there are 50 states. So you have 50 options to choose from in which state you want to incorporate your company. And investors prefer the state of Delaware to invest money in. Why Delaware? That's the most important question. Why not the other states? So these are the top reasons that I've put down here as to why Delaware. Let's quickly run over them. So, limited liability protection. It's called the incorporation capital of the world because it has got the most established corporate laws, most up-to-date corporate laws, which is why, investors and founders, it's friendly for both of them. And that's why this state is preferred. 68% of Fortune 500 companies are registered in Delaware. It's got no state income tax, no inheritance tax, and no sales tax. The income generated from IP is tax-free. This is a super important point. So let's say, so companies like Google, Apple, Amazon are all registered in Delaware to benefit from IP profits. So while, let's say, for example, Google, Apple, Amazon, they'll have operating entities in different states of the US, they will always have one Delaware entity where their IP is housed under that Delaware company. The reason is that any profits that you generate from any intellectual property that you develop, that is tax-free at the state level in the state of Delaware. The other states will tax you, but in Delaware, there are no taxes on that. So, if Amazon, for example, develops an IP and then, houses it under the Delaware C corporation, each operating entity of Amazon can basically pay royalty to the Delaware C corporation to use that IP, and all of that money is tax-free at the state level in the US. So IP profits are tax-free. Again, Delaware is globally recognized and reputable. A lot of folks across the world know a Delaware C corporation. Delaware's got a court of chancery. The court of chancery is one of the oldest courts in the US, in fact, also. And they've got judges instead of juries in the US. So the whole decision-making process is fast-tracked and it's more founder-friendly, investor-friendly, like I mentioned earlier. Also, they've got the most advanced and up-to-date case laws. So IP protection, I would say lower taxes. Fortune 500 companies are there, so you can have, you can call yourself a Delaware C corporation. It's a prestigious. I would say it can be a prestigious status for you. So these are the reasons why investors also prefer Delaware and founders also prefer Delaware. Also, a lot of times in the US, if you're looking to raise money, an important point is that you should be incorporating a Delaware C corporation. We know that. the feedback that we get from a lot of clients is that if the investors are not ready to take meetings if you don't have a Delaware C corporation incorporated. That's a bit harsh, I believe, but that's how they are. That if you're coming from outside of the US and you don't have a Delaware C corporation, you won't get an investor meeting. But if you have one, then maybe you'll be prioritized and you get a meeting much faster. So this is just some feedback that we've collected from folks we worked with in the past.
By the way, after the presentation, we'll deal with creating your top co, moving your top co to Delaware, because that's creating a subsidiary is easy. We created one, it took like 2 days, but moving the entire top company and with all the investors and everything is a big thing. So we'll talk about that at the end.
So now that we know that we should be incorporating a Delaware C corporation, let's understand the process and the timeline for it. So step one is registration of the company, which takes 1 week on average. The US is a very easy place to do business. So registration just requires the company name of your choice, your email ID, your US or non-US physical address, and your contact number. So no documents required for step one, only information required. Then we have to apply for an EIN. EIN is, like I mentioned, the employer identification number. It's basically a unique tax number for your Delaware C corporation. This, again, if you have a US social security number, if you've been in the past in the US, then it's just 1 to 2 days to get the EIN because it's generated online. If you don't have a US social security number, you can have it expedited with us and you can get it in 3 to 4 weeks. If you choose not to expedite it, then it's 5 to 7 weeks. But either ways, you will get the EIN once you register the company. Yeah, so this is step 2. And step 3 is then applying for a US online business bank account. Now, for applying for the bank account, step 1 and step 2 need to be completed. That's how they've been mentioned. Without the EIN or the company formation documents, you will not be able to open a bank account. It takes another 3 to 5 business days. And the additional services required to keep your company compliant or to set it up correctly are also included, such as the registered agent, the virtual business address with a mailbox and a mail scanning service. So this is the overall process, 3-step process with the timelines. Yeah. So you can add up the timelines and decide, you can backward calculate when you want to get started in the US and accordingly start your incorporation process. Now, coming to the ongoing compliances for the Delaware C corporation. So let's say you register your company, you set it up with us, you have your bank account opening, you're ready to transact in the US. Now, while your business scales, what do you need to do to keep your company compliant in the US? There are 4 important compliances. The first is the BOI reporting. The BOI stands for Beneficial Owner Information Reporting, where the owner's information, the Delaware C Corporation's owner's information, or anybody who has 25% or more shareholding in the company basically has to report their information with the FinCEN. And this has to be filed within 90 days of incorporation. If you incorporate today on the 10th of October, then within 90 days from 10th of October, you have to file this report. The next is your state compliance. You've registered your company in Delaware, and you have to do a state compliance, which is due on or before 1st of March every year. And the fees is $225 to $450. We can help you optimize this tax fee as well. So this is at the state level, you have to do the compliances. Next is your federal or your company's corporate tax return, which is due on or before 15th of April every year. And then is bookkeeping. Again, bookkeeping is super important because the numbers that go into these state reports, federal reports, will come from accurate bookkeeping records. So you should have your books updated periodically. So these are the 4 compliances for the US company. One important thing to note here is that let's say you incorporate the C corporation and you don't use it for 6 months or you don't use it for 1 year. Basically, there are no transactions. You have no activity in the company. It's just like a debt company, for example. Even in that case, these compliances are mandatory. These are company level compliances, not business level compliances. So the moment you register a company, these 4 compliances become applicable to you. And then as your business grows and scales, there could be additional business level compliances. But yeah, these are the bare minimum that you need to do to keep your company compliant. So you should account for these and the cost for these before you start the company as well. Deduction of startup costs. So there are certain startup costs that you can deduct in the first year of operations. So $5,000 in startup costs and $5,000 in organizational costs is something that you can deduct in the first year of your operations. This is only available in the first year. If you miss this benefit, then in the future years, you will not get this benefit. And this benefit is for costs incurred prior to registration or beginning of operations for your entity, basically pre-registration or pre-incorporation expenses. This benefit is for those. And yeah, for you to get the benefit of these $10,000, your total startup costs have to be under $50,000. With Doola, you can incorporate a company for like less than $500. So I'm guessing you won't cross this $50,000 if you add up the other pre-incorporation expenses as well. So most of y'all can take the benefit of this as well. Now, if your cost exceeds this, it's not like the benefit goes away. You can amortize the amount over 15 years. Now, just to give you a quick brief on what the startup costs and organizational costs look like. Startup costs like are your market research, advertising done before the business, travel costs for business development, etc. Organizational costs include the legal fees, state fees, and fees for creating the entity. So basically the Doola fees that you pay, for example, or similarly, any fees that you pay to incorporate the company will go under organizational costs. So a total of $10,000 in deduction that you can get in the first year of operations, as long as your total cost is less than $50,000. Let's move on to the next, coming to the taxation. We'll spend a bit time here. So how are C corporations taxed? Basically, let's say, so now we've covered, I would say we've covered the setup, the ongoing compliances, what benefit you can get in the first year of operations. Let's say now you started making money, you're getting revenue, expenses have also started to increase. What's the taxation look like? So a C corporation is a separate legal entity from its owners or the shareholders and is subject to double taxation. Double taxation means the corporation will pay tax on its income, and then when the corporation issues dividend to the shareholders will also pay taxes on the dividend that they have personally received. That's why it's called a double taxation structure. C corporations are taxed on their profits at the federal level, and the corporate tax is 21%. So let's say your revenue is $100,000, expenses are $80,000. On the $20,000 of net taxable income, there could be some more tax adjustments that may need to be done. But let's say roughly $25,000 is your net taxable income. On that, you have to pay a 21% flat corporate tax. In the US, let's say your taxes are paid in the US, okay? And you want to, as long as you keep the money in the US, or you want to reinvest the money into the US and you keep it in the US bank account or in the US, there is no problem. But if you want to, after payment of taxes, whatever profits is left, if you want to distribute, if you want to repatriate it back to the UK or to your home country, then you will have to declare it as a dividend. You can't just withdraw it like that. You have to declare it as a dividend, and you have to pay a dividend tax as well. So normally the US imposes a 30% withholding tax on dividends. So let's say you've got like $15,000 of profits left, and now you want to bring that money, $15,000 back to UK. In that case, you'll have to pay a dividend tax as well. Now, the general withholding tax that you have to pay is a 30% withholding, but the US and the UK have a double taxation avoidance agreement. So under the US and UK tax treaty, the dividend withholding tax rate has been reduced from 30% to 15%. And in certain conditions, when you're holding 10% or more, the tax could be further reduced to 5%. So you only have to pay 15%. The minimum is 5% and the maximum is 15% that you will pay to the US government to bring your money back after you've paid the 21% tax on your profits. And all the taxes that you pay, the 21% tax that you pay in the US, even for that also, because the US and the UK have a double taxation avoidance agreement, you get a foreign tax credit for that. So you report the same income or the same US income in the UK. Whatever taxes you paid in the US, you take a foreign tax credit of that in the UK. And then only the balance taxes, if any, have to be paid in the UK. If there is no tax liability or if there is an excess, then you probably get a refund. So this is how the C Corp's taxation works. Some of y'all may have questions on this. You can drop it in the chat box and, we'll take it later on as well. Now, there's a special exemption that I want to cover, which is called the QSBS exemption, which is very popular among tech startups in the US or any startups in the US. QSBS is basically an exemption that allows you to avoid taxes up to $10 million in capital gains or 10x the investment that you made in an eligible company. This limit is per individual, per asset. So if you have 20 different startup investments, or if you run, let's say, 2 different startups, you will get this benefit per startup. So 10 million into 2 or 10x into 2. So this is per asset, per individual. So let's say you sell your US company for $10 million. Without QSBS, you might have to pay up to $3.5 million in taxes. But with QSBS, you pay nothing, zero, because you're availing the benefit of the exemption.
So, Parshwa, let me hop in here because UK founders are all familiar with SEIS and EIS tax savings for their investors. And QSBS is the US version. And amazingly, in the UK, 100% of founders and hopefully a decent number of investors know about SEIS and EIS. But in the US, it turns out quite a few people don't know about it. So there are a couple of quick things to know. With QSBS, there's no initial tax deduction that the investor can make. So it's not as good as the one in the UK, But if they keep their shares for 5 years and sell after that, they pay no federal capital gains tax, and in some states, no state capital gains tax. But here's the interesting thing. In the UK, only investors, not founders, can get these tax benefits. In the US, both founders and investors can get these tax benefits. But it only applies if you're a US C corporation. So if you are a UK company raising from US investors, you can't give them these tax benefits. You can give your UK investors SEIS benefits, but if you flipped your company to become a US company, then you could, depending if you're still compliant, it's not too late and so on, then as a founder holding those shares, you may benefit from no federal capital gains tax if you keep the shares for 5 years, and your investors, you can offer QSBS to them as well. So if you have a US company, being able to tell investors that you can give them these QSBS tax breaks can make you more investable, just like SEIS, than the companies that don't know about this. However, for most of us on the call, we've got a UK company, and this is only going to be relevant if we flip to being a Delaware company, which we will talk about shortly.
Yeah. Thanks for adding that, Anthony. Yeah, so we just quickly go through the eligibility, though Anthony's mentioned it, most of it. Like, you have to be a US-based C corporation. You have to receive the shares from the company, and old investors selling shares to you will not qualify for QSBS. It has to come directly from the company. There is a 5-year lock-in period or a holding period, I would say, before you sell the shares. So it's from the exercise date, not from the grant date. Active business requirement is something like for which all tech startups qualify for. So if you're running, like, let's say a law practice or a CPA practice, or some kind of a personal practice in the US, then you don't qualify for QSBS. But yeah, usually all startups will qualify. Investors, founders getting startup equity, grant, vesting, all of that will also qualify. And yeah, your assets cannot exceed 50 million before or after you receive the shares. So that is another. So these are the 5 conditions. As long as you flip to the Delaware C corporation, you can make this exemption available for yourself as well for your investors. Okay. So yeah, we'll talk more on this when we speak about flipping the Delaware Topco. Coming to the business deductions, as a Delaware C corporation, you can take business deductions as well. So any ordinary and necessary expense for your business, you can take that as a business deduction, such as rent, utilities, office supplies, and business travel. What do you mean by ordinary and necessary? Because the definition is very broad. So ordinary, and the general rule regarding the deductibility of any particular expense is ordinary and necessary. And what it means is that it has to be common for your industry. Necessary could be explained as helpful and appropriate for your business to operate. 2 more important deductions that a lot of people either oversee or they get them wrong is the home office deduction and the vehicle expense deductions. I've covered that separately here. If you're using your home for your business, you can deduct a portion of your mortgage, interest, rent, utilities, expenses on your business. You can claim that as a business expense. Similarly, if you're using your vehicle for business-related expenses, then you can claim some portion of the vehicle expenses as well for your business expenses. So these are 2 overlooked deductions. So that's why I've specifically covered the other expenses such as rent, utility, office supplies, all of that, which is very uncommon understood. Those are anyways available to you. So I presume the same will be for the UK as well. So yeah, you should be aware of this, but this is just a quick brief touch up on that. There are certain tax credits also available in the US, essentially important for those developing IPs or those who are working in newer industries, raising money for upcoming industries or trends. So this is again, R&D tax credit is applicable to any US-based company who's performing activities related to development, design, improvement of product, processes, formula, software. We can get into the definition more specifically. Like, if you want to get into this specifically, like, what counts as improvement or what counts as changes in development design, you can reach out to us and we can let you know. But basically, if your business is spending money on innovation, then you can get eligible for the R&D tax credit, and it's typically between 6 to 8% of the annual R&D expense that you can claim as a credit. So you can't claim the whole thing, just a portion of it. Another one that a lot of people miss is the work opportunity tax credit, where if you hire employees from a certain target group, like veterans or long-term unemployed folks, you can claim a credit for the percentage of their wages, and that goes up to $2,400 of deduction. And yeah, the more number of hours they work, the higher credit you can receive for them. Again, the working, etc., you can reach out to us if you're kind of keen for this. But yeah, these are the 2 super important credits that you should be aware of as a startup operating in the US. Now, this is just a basic some tips to avoid non-compliances in the US. Pay your taxes on time, file your returns on time, use a reliable or a robust accounting software to maintain accurate details, because if your records are messed up, you will not be able to fill out any reports, any returns, anything like any paperwork accurately. Keep your business and personal records divided. So your personal bank account should be different from your business bank account, and the bookkeeping should also be separate. And use a tax professional such as a CPA. If your business is growing, you have some complicated transactions, or if you just need to have like a control or full knowledge about where you can save money and how your business is progressing from. So I think this covers pretty much the end of what I wanted to cover, Anthony.
That was an amazing presentation. Let me go to some questions about bank accounts and so on. So when you open, firstly, the company's address, does that need to be in Delaware? I think there are two concepts of address in the US. There's a registered address and then there's the office address, kind of like the UK maybe. And I've heard that the registered address has to be with the registered agents in Delaware. So tell us a bit about that. And I'm guessing Doola can act as the registered address or something.
That's correct. So in the US, whichever state you decide out of the 50 states, whichever state you decide to incorporate your company, you need to have an address there. And that is the address which should go on your legal papers. So the state will have that address on file. You can use that same address. And you can always start with a virtual business address in the US. You don't need to have a physical office. The US allows a virtual address, and they also need a mailing address. Most of the states need a mailing address as well, where they can mail you their letters, documents, notices, reminders. So you can have the same virtual business address for your company registration on your papers, and you can use it as a mailing address as long as it has a mailbox service as well. And every US company also needs a registered agent in the state of incorporation. So if you're looking to incorporate in Delaware, Doola provides you with the registered agent as well as the business address with the mailbox service as well. Coming to the banking part that Anthony mentioned, so there are online banks in the US through which you can open a bank account, for which you don't need to be physically present in the US. You don't need to have a US social security number. You don't need a US resident, partner, director, nothing. You can 100% own your own company and remotely do the entire process with Doola, including the bank account opening. Now, we assist you with online banks in the US, and online banks usually need two addresses. One is your company's legal address that Doola will provide to you, will be mentioned on your documents, etc. Because that's your company's address, your legal address. The second address that banks want is your physical address from where you're actually conducting operations, where you are physically present. So that can be a non-US address as well. So you can provide your UK address on the bank account application. And the bank will also need an address proof. So the three most accepted and easily accepted physical address proofs could be your UK addresses, either your lease agreement with the same address mentioned, it could be a utility bill in the last 3 months, or it could be your bank statement your latest bank statement where your address is mentioned. So as long as you provide your physical address outside of the US correctly and it matches with any of these three documents, you'll be able to open an online bank account in the US as well, and we assist you with that process as well.
Okay, great. Now, for the US banks, which banks do you support, and would a WISE bank account for most purposes be sufficient as well? Because, for many companies that are already on WISE, it takes about 3 minutes to make a US WISE account.
Right. So we've partnered with Mercury. Mercury is an online bank in the US. So some of you all may have heard about Mercury, some of you all may not. It's MERCURY. Right. So we've partnered with Mercury to get you an online US bank account. And they're regulated by the US financial regulations. They provide FDIC insurance, and it's a great bank to bank with. But yes, there are some times where, because of strict KYC regulations, you may not be able to open a bank account with Mercury. In that case, other solutions like Payoneer, Wise, Air Wallets, these kind of solutions work well. Coming to Wise, Wise opens multi-currency accounts. It's cheaper than Payoneer, and it gives you, it's easier to open the account as well. So heard great things about Wise. But of late, in the last 15 days to, I would say, 1 month, I've heard a lot of clients coming back to us saying that Wise is not opening USD balance accounts. So I have to yet establish that claim if it's true or if they've made an error. But at the moment, looks like Wise may not open USD balance accounts. But if they are, then you can definitely open a Wise business account as well. And you can use that for your banking requirements too.
Okay. All right. So why don't you continue the next couple of slides? Let's talk about how people can use Doola, and then we'll stop screen sharing and talk about Delaware flips and any other questions.
Sure. So we've got a special offer for you guys where we're offering a discount on the US company incorporation and compliances. So SeedLegals community members get a special 10% discount on US C Corps with Doola. And you can use this discount on incorporation, compliances, bookkeeping, taxes, wherever you need. There is a dedicated partner link, a partner code. And if you ever have more questions, you want to deep dive into something, you can schedule a free consultation also with us. The links will be dropped in the chat very soon, so you can access you can schedule a free consultation. Plus, you can save the code to apply it when you're checking out on our website. Now, coming just a quick comparison on why we have the starter plan. We have two plans: the starter and the total compliance. But starter plan, if you compare it with the other companies like Stripe Atlas, First Base, or even these listed companies and Business LegalZoom, we offer a very competitive pricing overall with no hidden costs. Firstly, that is super important because you may see zero here and then the cost is increasing, but we don't do that. So yeah, very competitive pricing, value for money, and no hidden fees. Plus, we've got a great Trustpilot score as well. So yeah, you can definitely compare this for yourself, but this is just an overall comparison where we get you everything that you need at a cheaper cost. And if you want compliance is also covered, then we also have that. And again, it's cheaper than most of the other providers as well. So yeah, so we cover everything, we cover all the compliances that I mentioned, and we give you some extra tax support as well. Yeah, that covers our starter plan, our total compliance plan. So if you've got any questions, you can always live chat with us. We have a 24/7 live chat on our website at Doola.com. You can email us at hello@Doola.com, or you can also schedule a free consultation with us and we'll help you with all your questions.
Thank you, everyone. Please reach out to Parshwa and Doola for any questions on that, and of course on any other things that we can help with on SeedLegals. And hopefully soon, in November, we'll have SeedLegals in the US, so you'll hopefully have a fairly easy way to see your US and UK companies, whether it's a topco or subsidiary, in one interface, and have the cap table on both and create agreements on both. So hopefully to make this whole minefield dramatically easier. Thanks, everyone. Have a great day. Thanks.
Thank you, everybody. See you.